discuss earnings with Vishal Thakkar, the Deputy CFO at Anupam Rasayan, joining us on the show. Well, the earnings were a bit muted. The revenue has slipped 20% sequentially. The profit is down 30%. So let's try and understand whether this was a one-time weakness or seasonality, or there is some pressure which is there in the business as well. Vishal, hi, thank you so much for making time and speaking with us. That's exactly the first question. Why the weakness in the quarter gone by? Was it a one-off seasonality, or is there a pressure in demand?
Okay, so I'll just put it the way I'm seeing the numbers. And see, if you look at my consolidated revenues, have grown by 19%. If you look at it from a YOY basis, because see, our business, we should look at it YOY, because QoQ is because the first half of the year is typically 40% of the 40 to 45% of the total year, and the second half is always the higher than the first half. So I think we should be looking at YOY rather than QoQ. So if you look at it from a YOY perspective, my console numbers have grown by 19%, and my standalone has been flattish. In terms of margins, if you look at it, if you look at my EBITDA margins, my EBITDA margins has been equal or better than the last year. In terms of margins from 28 to 29 on a console, and 29 to 30 from a standalone basis. So to me, the numbers look fairly robust in the kind of environment that we are right now, with a kind of a volatile environment as well as a deflationary environment. We have been able to deliver that kind of a number. Second, also, if you look at it during the inflationary environment as well as during the deflationary trend, in both the trends, we have been able to maintain our EBITDA margins. So that's something which I think we take a lot of comfort from. And on a annual basis, I think that our numbers on a standalone should also be delivering a revenue growth which has been around 20+% there. So I don't see that to be anything very out of ordinary. Yes, first quarter standalone has been flattish, and yeah, that's something which on a YOY basis, which we feel that it's a pushing of the demand going into the second half of the year. That's what I would say.
Sure. So Vishal, what you're saying is that you'll do at least a 20% growth in FY24 in terms of top line, and the margins will be 26 to 28%?
Yeah, I think you are. That's what. So we should be doing better, but I would want to keep it at 26 to 28 for the guidance for now.
Talk to us about your top 3 customers. What are you hearing from them for FY24 demand trends?
If you look at it, top 3 and even the others as well, if you really look at it, the demand has been consistent. Yes, as I was mentioning, that first half will be the demand, incremental demand is actually moving to the second half of the year rather than the first half of the year. But in terms of revenue guidance or the volume guidance, especially if I were to say, the customers has not been changing their guidance. In fact, and the clear example of that, if I were to see it, is look at the LOIs that we have been signing in this quarter. Around 4,400 crores of LOIs has been signed by us in this quarter. So demand, we don't see it from a secular trend perspective. I don't think we are too much worried on the demand side. Yes, on a quarter-to-quarter basis, yes, there will be some bit of a pushing into one quarter or to the other quarter. That may happen, and that I agree with you.
3 products. When you look at the top 3 products, what are the trends there? And if you look at the global environment, can you just connect the dots for us that what is the trend for top 3 products globally also?
Okay, let me give you the global first. If you look at it, yes, the global scenario, as everybody knows, that there was an inventory in the agrochem supply chain, which is getting unwounded, and probably it will be a couple of quarters by the time that the inventory should have been unwound. Has it impacted us? See, the classic thing that is happening is for a customized, say, players which are more into specialty side, the demand has not been so much impacted because of these events, especially in the products that we are in, because it's not. My product doesn't go only into Europe. My product will go via Europe into Brazil, into Americas, into various other parts of the world, and hence we have not seen too much of a demand pressure that we should be worried about. Yes, as I said, 1 or 2 quarters is what we are talking about here, and that is flattish. It is not reduction that we are seeing here.
Material side, I would imagine that given that energy costs were down, it would have benefited you. But now that energy costs are moving higher, could it be back to margin pressures? Because yes, for the quarter gone by, and we are discussing the quarter gone by, crude was down, coal was down, energy prices were down, but now in last 15-20 days the reverse has started.
So if you see, okay, let's put it two things. One is that my model is a pass through, and that's what we were saying, right? That when I had an inflationary environment, my EBITDA margins were maintained at 26 to 28%. When I have a deflationary environment, I have my EBITDA margins maintained from 26 to 28. So what we are saying is that everything, as I was mentioning in the earlier discussions as well, that it is not only the raw material cost that I have a pass through. I have a pass through on raw material, overheads, inventory, your interest cost, or your or your even the utility cost, including energy cost. So I don't see that to be a much of a challenge. And yes, there has been a bit of a movement that will happen in the energy cost, but energy cost today it contributes around about 10% of my total cost, and that we are able to pass through. I don't think there we will be having anything different from there on.
Outlook in terms of exports, if you could just break it down for us. Are you looking to sign any LOIs? Is there anything that's currently in the pipeline?
I can say what I have done till now. Yes, there are a lot of work that we are doing in terms of engaging with the customers, and that demand is looking very encouraging. Especially on the long term basis, the demand looks very encouraging. As I mentioned earlier, also totally, if you look at till date, the LOIs and contracts that have been signed by us, it's around 7,700 crores. And last quarter itself has been a significant bump on that. So I would leave it there in terms of the expectation that there is a reasonable level of buoyancy in terms of demand that we are seeing, especially on the long term side.
All is well, right, Vishal? That's what you're telling us, that anybody who thinks that Anupam Rasayan business, because of global factors, inventory losses, is slowing down, you think there is no problem whatsoever?
So as I said, it's pushing, it's shifting of couple of quarters. That's what I'm saying. I don't think there is anything more than that, and I would really see that. As of now, if there is anything, we'll come back to you and let you know as well if there is anything significantly changing from what I am saying right now.
The fact that you're caveating is because the things are changing on a very dynamic basis, on a day-to-day basis. So I like that tentativeness even in your commentary, that you don't know how things will pan out. As of now, that is what the things are looking like.
No. Just let me correct.
Sure.
It's not that I don't know what is going to happen in the next 2 quarters, but I am saying ceteris paribus.
Yeah, it's always to be, have that precautionary note as well. Thank you so much, Vishal, for joining us and talking to us about how the outlook of the company is looking like.